So let's talk about sectors
Okay. Yeah.
that you like, and where you can kind of seek some sort of safety in this environment where nothing seems safe. I mean,
Yeah.
when Target and Walmart are struggling,
Right. Well,
it's
and
really
that's
bad
because they
times here.
were
But
a tad overvalued. I mean, so look, just in general, I think the stock market has. I mean, it's funny. We printed all this money and we grew M2 over the last 15 years or so on and so forth. And so, but we didn't have much printed and reported inflation. As we all know, inflation was kind of running 2-3%. It was pretty tame. But we had a lot of inflation in stock prices, right? I mean, all the stocks. We had one hell of a bull market in the last. I mean, and go look at a chart of the S&P. I mean, it's been, just the constant refrain has been buy the dip, and it's worked. So, I don't really think you can hide in stocks, although at least stocks represent earnings claim on a business that'll be around after we do a currency reset. So that makes them better than bonds. I mean, the first thing, and you look at the 70s as your analog, the bonds were just a terrible investment. I mean, you lost like 80% of your purchasing power. It's horrible. So you got to be totally out of bonds. Then when you go to stocks, I mean, I tend to, in the stock area, I'd say, well, if I were going to hide in stocks, I'd try to hide in commodity related recurring business, recurring revenue businesses that have decent valuations. And there are some out there. I mean, it's not just you got to buy gold, you got to buy silver, you got to buy oil. But if you look at the 70s, what performed the best was gold, silver, and oil. I mean, three things that had limited supply that were commodities that were needed, right? So I think those are the best place to be if you're going to be in the stock market in companies that are related to those three things.
I'm buying an
yes.
exchange traded fund, ticker JEPI. And this is it pays a monthly dividend over 9%, and that's pretty substantial. And you get paid monthly on it. Here, I think it's a nice place to put cash right now in an environment where it's kind of difficult to figure out what's going on. But the bigger picture is really looking at the end game. What do we know is going on? It's very simple. We have swelling global debt. It's ballooning, and it will continue to balloon until we get a bursting of that debt bubble, the debt market hyper bubble, which is being fueled by design. The larger they can make the global debt bubble, the bigger the bang when it eventually bursts. And we witnessed it. We witnessed some of it when we had that uncontrolled sell-off in that 10-year yield. And then, of course, central banks got in here and started managing the yield curve more so than they were already here. And they're going to continue to do that. But it doesn't come without a cost. The cost here is more inflation, quite obviously. So what people need to do, look, not everyone has the ability or maybe even should be in an exchange traded fund or in the stock market. What people need to do, in my view, is realize that we're in this environment of swelling debt here and just take the opposite side of that trade. That is being real things. I've been explaining to people since I started well over a decade ago to hold hard assets, physical silver, my favorite asset of all time, physical gold here, because eventually how I see this playing out, it should make sense to people. Let's put this together real quick. If just to clarify, eventually we're going to get a meltdown in the debt market, and this is not going to be by accident. It's being fueled by design. What I mean by a meltdown in the debt market is an uncontrolled spike in bond yields. Okay. And what that's going to do is exert pressure on the stock market, the complete opposite of what we've been witnessing since the meltdown of 2008. So if you get an uncontrolled sell-off in the debt market, you'll see yields spike very rapidly, like we witnessed with the 10-year yield, 60 basis points in like 2 days. Okay. And what's going to happen is that'll put pressure on the stock market, and cash is just going to move into other assets. It doesn't go to money heaven. Cash moves from one set of assets into another set of assets. And in my opinion, gauging from this scenario, it should be pretty easy to understand. A sell-off in the debt market will precede a sell-off in the stock market. You have to understand too, the debt market is the driver of everything, even the stock market. The stock market itself is a derivative as to what's going on here, as everything prices off of what's happening in the debt market, which is the largest aspect of the market altogether. Okay, so by understanding that, we can pretty much understand where other assets are going to go. when we get that implosion in the debt market, stocks will sell off and cash is just going to move into, I believe, into commodities. And I think the most suppressed asset in the history of the world is silver.
So what a lot of, I'd say, more sophisticated investors are doing right now is they're really focusing in on 1,000-ounce silver bars. We've seen a lot of those move lately. The 100-ounce silver bars, if you're buying silver, are still of good value. And on the gold side, there's no change really. It's kilo gold bars are the best value for your dollar. So we have noticed a trend recently that there are more large buyers coming into the market, which from my experience tells me that you've got these sophisticated investors that are starting to reallocate their portfolios, starting to move money into precious metals. And they don't just dabble, they come in and buy a fairly large position all at once. And those are the products that they're focused on because they're trying to save a few percentage points as the price continues to decline.
So let's bring it back because, like I said, you've been tweeting hashtag got gold, got gold, got gold. Why do you see gold as a solution here?
Because it's the only financial instrument that runs no counterparty risk, and everything that we're dealing with is all of this counterparty risk. It's the only financial asset that truly is invisible. Once you hold it, you own it outright, and it is proven for 6,000 years to fight inflation. It is proven to be, the Bank for International Settlements, gold held at home runs no political risk.
It's an environment where nothing is safe. Should I be getting into ags then?
Yeah, so this is what I call on the macro compass, my 4-quadrant asset allocation model. We are in the quadrant that I call there is nowhere to hide effectively, unfortunately, because global demand is slowing down, central banks are tightening at the same time. Oh my God, this is not a friendly environment at all. So you can choose some defenders in your portfolio. You remember in our last interviews I said, raise your cash allocation, buy some dollars, be more defensive, because to be honest, there is no place where to hide. And I hope, that worked pretty well, and it is still my stance. If you believe that inflation is here to stay or to slow down less than central banks expect, then it's going to get worse for stocks, worse for bonds, worse for gold, worse for Bitcoin. The thing that can hold up your portfolio is commodities that are stuck in a very tight supply regime. So that can be oil, that can be agricultural commodities, that could work.
Why worse for gold, Alf? If you look at it, compared to Bitcoin, S&P, it's one of the best performing assets of 2022.
So gold is holding pretty okay, as I highlighted last time as well, but it's still not delivering a major performance, especially adjusted for inflation, Daniela. We know that gold is supposed over the very long term to preserve the purchasing power, at least, right, of our savings.
I want to tell you a few things that I think are really important for the people that are watching, because I'm noticing something that is a bit concerning. People are looking like deer in the headlights. They're watching all these things unfold and they don't know what to do, and so they're doing nothing. And this is it is a time to do nothing, but I feel like people really have to understand that there's some big things happening at the moment. I've sold all of my real estate this year. Closed on the last property in early August, and I'll have no real estate at all. And I think people are saying, well, maybe that's a good thing to do right now, but they're not doing anything about it. They're not doing anything about stocks. They're down 20%, and they're just watching and waiting. And I don't know anybody that's sold any crypto yet. They're just saying, well, I'm not really sure what to do about that. I sure am down a lot. So that's a problem, because people are standing like watching a car accident. You have to get out of the way. That's what you have to do. And that's what people need to be doing right now. And I have a way to do that.
So what is it? I want to know. What's the plan here?
Well, so what I've been spending my time doing, if you recall, last time I think I suggested people go to a fish concert, take a vacation, all these things. They sounded silly, but there's not really anything to buy right now. So that's the thing. Everybody's like, what do I buy? What do I buy? There's nothing to buy, because if you notice, everything you own is going down in value and everything you need is going up in price. So what you don't want to be buying things right now. What you want to be doing is you want to be protecting your liquidity. You need liquidity. I want everyone to picture, I know you have kids, you've probably been to a party where they have a bounce house. If the fan on the bounce house turns off, the thing collapses in a couple of minutes. So this economy, the Fed's economy, is like a bounce house. If the fan is turned off, which they've turned off the fan, the air comes out of the bounce house really fast. You do not want to be in the bounce house when the walls cave in, because you're going to get lost in there. It's disgusting. You want to get out of there before the walls cave in. That's what's happening right now. Now, I don't think that's going to go on forever. But what I'm doing every single day is I'm buying T-bills, and I have an account with Treasury Direct. It's anybody can get one, but most people don't. And I'm a direct bidder in the T-bill auction. And people say, well, that's pretty boring. All right, well, right here I can see the T-bill for 4 weeks is 1.9. I mean, that's a lot. I mean, that's 1.9% for 4 weeks. I mean, I'll do the 4 week, the 8 week, the 13 week. I'm spending all my market time buying T-bills. Why would I be doing that? Okay, people say, oh, the U.S. government, let me tell you something. The U.S. government, if it fails, you got much bigger problems than making profits. You're going to be surviving, okay? So T-bills are a good place to hide out, and that's what I'm doing right now, because I think we're going to be in for a problem come this fall, and I'm going to be ready to take action, and most people are not going to be ready.